Okay, hey everyone. I'm so excited that you're watching this video. You honestly have no idea. Day trading on the Forex market has completely changed my life, and I'm so passionate about it because if people just understood where to start, knew where to start, had the tools and the resources to use to day trade, they could make money themselves. You don't have to put a lot of risk out there. It's not scary as long as you understand what you're doing and how to manage it and do it safely. That's all you need. And when I started, I've been day trading full time for about a year. I started about 3 years ago because I love the stock market and I heard an ad for day trading and I probably paid in total $8,000 for my course for coaching, and it was nice to learn, but that's all I thought there was out there was to learn how to day trade was through this $8,000 course. And over my time, I've realized I don't need to pay that much. I don't need to use other people's indicators that charge me $300 a month. I just need to trade how I like to trade and do things I like to do in this Forex market. And I thought if I just had someone to just guide me, to lead me, to show me the ropes, my life would have been changed 3 years ago instead of a year ago when I was able to go full time. This whole course, what it is, it's to allow you to get set up so you have all the tools, and if there's a trade out there that needs to be placed, you have the means to do it and you know how to do it. I'm not gonna sell you some fancy indicator to say this is the only way to trade because everyone trades differently. But in this course, what I'm going to show you how to do is just get it set up, show you how to do it, how to understand it, how to find trades. And as you do all that, you can then, make your own decisions and understand, wow, I can make money in this Forex market. And I'm so excited to get showing you guys how to do all this. So let's get going. So just kind of for our course overview, um, this video is going to give you an intro to Forex. I'm going to give you the basics, try to give you a knowledge, but I want you to refer a lot back to this video because I'm going to explain to you, how spreads work or margin or leverage. Those words might not mean anything to you right now, but they will. And as you watch the rest of my videos and as you trade, you might be like, oh, Cody once mentioned that in his first video. So you'll always have access to these videos. Come, take screenshots or pause it and take pictures on your phone when I pull up some of these slides of things that that explain these little ins and outs. You'll see. But that's what this video is going to be. And then, I'm going to talk about the brokers I like to use. But there's probably going to be 15 to 20 videos out there that I've made in almost a little over 3 hours worth of footage, showing you guys all the things you need to know. So the lessons, it's going to go over the brokers I like to use, how to track news, videos for setting up every account, and understanding why I use every account that I do. And then I'm going to go over our trading strategies, support and resistance, channel trading, Fibonacci, um, and more. And then lesson 4, I'm going to go over the types of trades there are, buy limits, stop losses, take profits, trailing stops, hedging and price averaging, and rules to follow to be successful. So all these things are things you can learn on the internet and, through other people. And then as you learn them, you can kind of use them how you would like to use them. But that's what I'm going to show you how to do over the next 15 videos. And I'm really excited because I know after all this is once you take the time, you're going to be like, okay, I can sit down, I can place a trade, I can work for 2-3 hours this morning, or I can just look at my charts for 30 minutes this morning, place 2 or 3 trades and go to work, and maybe make an extra $100, $200 a day as long as I'm doing it correctly and I'm putting the risk out there that I want. So the first thing is, what is Forex? So day trading, there's a lot of different ways to day trade. You can day trade stocks, you can do Forex, you can do options. But I day trade Forex, and that's what I'm going to teach you guys how to do. And the reason why is we'll explain this. But Forex is the foreign exchange. It's where a nation's currency is traded for that of another. Um, so you're trading dollars to pound to euros to Australian dollars to Chinese yen to all of it. It's the largest financial market in the world with US $4 trillion traded every day. I saw the New York Stock Exchange has like 50 billion traded every day, but this is traded with $4 trillion every day. I'll get into more to why that's important, but it allows you to always be able to trade what you want and have your trade filled. And then, yeah, just the currencies we trade. So the Canadian dollar, euro, pound, they're always going to be abbreviated like this. So that's US dollar, Canadian dollar, euro, pound, and then more. So the Forex is a foreign exchange where you're trading currencies. So just to get right into it, so what is a currency pair? So when we're trading, it's not like Apple stock is $180 and it's either going to go up to $200 or down to $100. You're going to see pairs, which is the prices. So I'm just going to read this. It says every time you trade a currency, you're predicting the strength of one currency against another. For example, in the pair the euro to US dollar, you're looking at how strong the euro is compared to the US dollar. If you place a buy on euro to US dollar, you're predicting that the euro will increase in strength compared to that of the US dollar. An ideal situation is to trade a currency pair where there's one currency that is increasing in strength and the other is simultaneously decreasing. So, say, the euro is doing really well right now, and then the US dollar for some reason is dropping because the markets are going down. You would want to buy the US dollar in comparison, the euro in comparison to the. Okay, so if we look at this pair right here, so this is what it costs to buy a euro. So the buy price is going to be 1.12365, and the sell price is going to be 1.2362. So what that means is if you buy it at 1.2365, you can sell it right now for 1.12362. Which if you buy it right here and sell it right here, that means you're going to lose money because it's down below. That's what's called the spread. There's always a little bit of a spread, and that's what the broker charges or does to make a little bit of money. But you've got to just wait for the pair to go up above to where you bought it from. Or, if you're short it right here and someone's going to buy it right here, you're saying right here and someone's going to buy it right here, it's not, you want the price to go below because when they short it, you want it to keep going, dropping down. I'll explain that more, but that's the sell price, that's the buy price. There's a little bit of a spread because there's always a little bit of a difference right when you get into it. But that's what a pair looks like. It tells you how many dollars it takes to buy a euro or whatever. So that's the price. I'm not sure if that's the current price, but it's an example. Okay, so the next is how does the market move? So there's people all over the world buying and selling currency. So, you might be like, because it's not a stock like Apple, like there's no news, there's no people buying into stock. How does this market move? It's just because people all over the world are buying and selling currency. And it's mainly banks. Banks are moving currency like no other. That's why there's $4 trillion traded every day. And so, when more people start to switch their money into a US dollar or buy one currency like the US dollar, the value of that currency tends to rise in comparison to others because there's more people in it. And so that being said, so with Forex, can your trades affect the market? And that's no. In order to affect the market, you'd have to trade billions of dollars, which that's large banks and corporations and funds that do that. So us as the little guys in it, you can just try to catch on to trends or kind of try to notice what's happening, but you're never going to be able to change the market. In stock trading or penny stocks, if you have large sums of money, there might not be enough shorts to short, or there might not be enough shares to buy. But in the Forex, your trade is always going to be there. As long as you have the money in there, it's always going to be filled within a second. So that's the nice thing about it. You're never going to affect the market, and there'll always be enough liquidity for you to trade. And so, yeah, so why trade Forex? So one reason is leverage, which allows you to have more money than is in your account to trade with, which I'll explain on the next slide, but it gives you leverage. The market is open 24/5. So the market opens Sunday at 5 o'clock Eastern time. I'm Mountain time, which is 3 o'clock. Pacific time, that would be 2 o'clock. And then it closes Friday at 5 o'clock Eastern time. So, but the thing is, it opens Sunday and closes Friday, so you can trade at any time. It doesn't close and open and close at 8 in the morning and close at 4 like the stock market. It's open all night because, as we go to bed, people in Europe are waking up, and so that market is open. And since it's currency, they're using currency, and so there's always a market open. You can always be trading. So some people like to trade in the morning, some people like to trade at night. It's kind of what you want to do, and that's what's nice because you can find a time that really fits you. You don't have to be awake when the market's open or anything. And then it's not as volatile as the stock market. It can move up and down, but when you get in the stock market or you're trading penny stocks, it can just really in a matter of minutes, just kick you out or be so crazy you don't know what just happened. Forex tends to kind of follow trends more, and it's not going to have huge jumps. It might every now and then, but it's for the most part, it's pretty steady, and you can kind of see what's happening. Another thing is you can hedge. So hedge is just when you're in a bad position or something's going wrong, you can hedge and make sure that that position isn't bad. So say you place a buy, you're buying euros, and that trade is down $50. Instead of getting out of it, when the market's going crazy and you just want to make sure you don't lose more than $50, you can place a sell. So your trades are going like this, but you're down $50, whether it goes up or down, but you're just stuck right there. But it allows you to just reevaluate what's going on and then get out of your trades or place more trades accordingly, which hedging we'll get into, but it's very nice. And then, like I said, you can always place a trade because the market's so big and there's always enough liquidity. So the first thing I went over was leverage. So with Forex, you can trade on leverage, which means that your broker will borrow you money so you can make more on each trade. That allows you to make more money with less money. And so on the account I'm going to set up, it's going to give you $1,000 in your demo account, but it gives you 1 to 100 leverage. But just to kind of so you understand what leverage is, so when you have $1,000, 1 to 1 leverage means you have $1,000. If you have $1,000, you have 1 to 50 leverage, it means you have $50,000 buying power. And 1 to 1,000 on 1 to 100 leverage means you have $100,000 worth of buying power. So you might be like, holy cow, I have $100,000. But the thing is, in the Forex market, you're trading these currency pairs where it's not even dropping a full cent in a day. It's dropping, 0.002 cents. And if you traded $1,000, and you placed a little trade and it moved 0.002 cents, you're not going to make any money. Whereas compared to if you traded $100,000, that could be like a $20 to $40 profit. So it allows you to have leverage, which gives you more buying power, which means you can make more money. But I'll show you, I'm just going to give you rules and show you how to make sure that you're not using too much leverage, or make sure that you know the risk you're putting into each trade. So whatever you're willing to lose on that trade isn't more than you want. Okay, so another thing, so the way Forex works is you trade in what's called lot sizes. And like I said, keep going back to, say, Apple stock, just as an example. A stock was $150, and that's what it is, $150. You buy one, it goes up to $200, you make $50. Forex is different because everyone's usually trading on leverage. It goes by lot size. So you don't buy 10 euros. Well, what you do is you trade in a lot. So a standard lot is, so if I'm placing a trade and I want to place a trade of 1, on the euro to USD, that's $100,000. So if I buy one lot on the euro USD, that means I'm buying 100,000 euro. And I'm hoping it goes up. But then there's a mini lot, so 0.1, I'm buying 10,000. In a micro lot, 0.01, I'm buying $1,000. I'm just going to talk about this a lot, and when I place trades, you'll see me either putting 1, 0.1, 0.01, but that just so you understand how much money it is I'm trading on that actual one. Because I mean, with, say you have a $5,000 account, technically you have $500,000 in there on 1 to 100 leverage. You can place a buy of 1, you can, $100,000 trade. And you can choose, do I want this to lose me, like, do I want to risk $50? Do I want to risk $100? What am I willing to risk on this trade? But it allows you to place a larger trade, and it's, as you know, as it goes up or down, you're going to be making or losing more money. Okay, so so how to trade it? So like I was saying, the US dollar to your US dollar isn't going to change a lot in a day, but this will show you kind of how we count it. So we go by what's called a PIP. A PIP is how you count how much money you're making on trades. And I'm always going to talk about, I made 5 pips this trade, 10 pips this trade. It's calculated off the price of the pair you're trading, and a pip equals a point in percentage. So how to count pips? So this is the euro to US dollar. So right now, the quote is 1.24683. This number right here, which is 1/1000th of a dollar or a cent, is 1 pip movement. This would be your 10 pip movement, this would be your 100 pip movement, 1000 pip movement. So kind of to explain, so if this pair goes up from 1.24683, then it rises to 1.24693, you made 1 pip on that trade. And say you start at 1.24683 and now it's 1.24783. See, right there is where you start. That went up 10 pips and so forth. 1.24683 to 1.25683. You can see, so it goes to 468 to 568, 6878, so that's 100 pips. And then there, that moves. The bottom one, you can see it's 68, but say it goes down to 1.2458, that's, you lost 10 pips. So when I'm saying, I made 10 pips, that means that went up to 7.8 instead of 6.8. So I usually shoot anywhere from, honestly, 5 to 20 pips a trade. Some I'll run longer, and I usually put my stop losses anywhere from 5 to 15 pips as well. So you'll see that as we trade, but that's just, take a screenshot or take a picture of this so you understand how to count pips. That's for the euro to US dollar. Some pairs are different in the way they count pips, like the yen. But for this pair, that's how it is. So, okay. So when I talk about pips, how much money am I making per pip? So if you place one micro lot, which is 0.01, remember the lot sizes, you're making 10 cents a pip. If you place one mini lot, which is 0.1, you're making $1 a pip. And if you place a standard lot, which would be $100,000 technically, every pip it moves, you're making $10. So, what would 15 pips equal? So if you traded 0.1, which is $1 a pip, and it moves 15 pips, you'd make $15. If you do 0.5 and it moves 15 pips, you'd make $75. If you do one full lot and it moves 15 pips, you'd make $150. 2 lots, $300. And if you're doing 5 lots and it moves 15 pips, you make $750 on that one trade. So that kind of helps give you an understanding of when I say, okay, say I traded at 0.3 and I'm going for 10 pips. 0.3 would mean $3 a pip, and 10 pips would be $30. So that's kind of how to count the pips. So with leverage, when you're leveraged, 1 to $100,000, you can place a couple trades at 0.1, and then as they move pips, you'll make money. So I hope that makes sense. And then the last thing is, just on this, just intro. So that's to kind of explain why we use Forex and why I like it, and the leverage and the pips things I hope you took screenshots and pictures of, because I'm going to refer to that a lot. But then there's different types of traders. So there's a scalper. A scalper will usually look at what there is and be like, okay, I think this is going to go up in the next 5 minutes, and they'll just place a trade. Get out of it if it goes wrong, but if it goes right, get out of it and take the profit. Day traders, which is kind of what I am. What I'm going to teach you how to do is just you open and close your trades on a single trading day. So our typical trade, it ranges anywhere from 20 minutes to 40 minutes, but some trades can take a couple hours or 3 hours or even longer. And some trades can be 5 minutes. It just depends on how much you're trading on that trade and how much you're willing to let it fluctuate before it gets to where you want it to. Then there's swing traders. They usually hold trades between 1 and 4 days. They might give it a long time to get there. And then there's position traders, or like banks or your 401ks and mutual funds. Those are people that put money into trades and they're holding them for months or even years, just letting these things grow. So that's the different types of traders there are. But that's what Forex is. And, those are the basics. I hope you have a basic understanding of the knowledge of a pair, why I trade Forex. But in the next videos, I'm going to show you how to set up all your accounts, how to understand it all, and go. And, once you're done with the videos, you should be good to be trading every single day. You should be able to sit down at your computer for 10 to 20 minutes, find a good trade, place it, let it go, and go to work. And eventually, as you build your account, or once you're comfortable enough, you can be trading more and, stay at home like I do. And I trade every morning for 2 to 3 hours, and it's the best thing ever. But remember, if you have any questions, you can always email me. And I'm going to get a chat created. If it's not already created, it will be there. But I'm excited for you guys, and let's get trading. So go watch the rest of the video so you can